Welcome everybody to the September 2014 Life Insurance Update Show right here on The Biz. My name's Eric Palmer. Thanks for joining us. Now what I want to do in the month of September is I'm going to talk about sales concepts. I chose 3 of these concepts to help you be successful selling life insurance in the month of September. Now for concepts, what we're going to look at first and foremost is what we call the Term Life 3 Sales in 1. Then we're going to look at old term versus new, and we're going to wrap up the show here with smart money. So on the term life concept, it's called 3 in 1, and actually this is one of the easiest concepts out there. It starts with selling North American's term life insurance. Now the great part about the Advantage term from North American is it offers full convertibility to any of their permanent products, including the IUL. So here's how this works. You sell the term life insurance product, and then you convert your product into the guaranteed GUL. It's a custom guaranteed product. Once you're in the custom guaranteed GUL, your client's actually going to then be eligible for what they call the guaranteed exchange privilege, which gives them the right to exchange to a cash value accumulation product, including the IUL, with no actual evidence of insurability or surrender charges. So again, there's 3 policies that can be sold, starting with that term insurance policy in a relatively short period of time. Now the next concept, something that you've probably heard me talk about before, and we actually emphasized on a product here last month called the Phoenix Safe Harbor. It's called old term versus new. Now when we talk about new term life insurance, what we're really talking about is term with living benefits. So I asked this question first and foremost: why is term life insurance called life insurance when there's only really a benefit you receive at death? What we should be asking our clients is, does your life insurance policy actually pay for expenses if you survive a heart attack, cancer, or stroke? So what are we talking about? We're talking about old versus new. Now, when I say old versus new, old is the traditional term life insurance. It's that death insurance. You've got to die in order to take the benefit. The new term life insurance is that living benefit. It's critical, chronic, and terminal illness. But when we look at the prices, some of you may say to yourselves, well, Eric, the old term life insurance is so cheap and our clients are shopping for the best rates. So here's what we have to do as agents. First, we have to recognize the difference in premium and then understand what you're getting for that premium. So on the old term life insurance, if I took a look at 40-year-old male, preferred non-tobacco, on a 20-year term for $300,000, I would have the cheapest term out there at $26.60 a month. But if I sold the new term life insurance, 20 years, $300,000 of benefit with the living benefits baked in there, I'm going to be looking at somewhere around $54.11 a month. So it's double the premium. But let's examine this further, and this is what we need to show our clients. At $54.11 per month with the Phoenix Safe Harbor, again, I'm getting term life insurance, I'm getting critical illness, chronic illness, and terminal illness benefits. If I bought those as standalone policies, a 20-year term at $26.60, a long-term care policy with $6,000 monthly benefit would cost me over $109 a month. Again, that 40-year-old male, preferred non-tobacco. Critical illness of $285,000 of benefit would be over $229 a month. So add that all up, my client's going to be paying well over $365 a month in premium. Now compare that to the $54.11 a month, and you've provided your client one heck of an opportunity to get all those types of benefits in one at a far, far lower premium. So let's end the show here talking about smart money. Again, what is smart money? Well, that's the single premium. That's the safe place that our clients want to put those lump sums. So where do they put this stuff? They put them in CDs, annuities, money market accounts, savings accounts, or sometimes they just come into a windfall or inheritance and they don't know what to do with it. So here's our suggestion. Let's transfer those funds into the Rapid Builder Index Universal Life offered by North American. It's interesting and unique about this product is there's no premium load, there's a waiver of surrender charge rider, we run that with a cash value accumulation test, and we actually also add in that chronic illness benefit rider. And what happens as a result is we've not only created a death benefit protection for our client, but we also have access to funds, not just for the chronic illness events, but also in the event they want a little bit of income or perhaps they need some money out for some sort of special event. Let's take a look at an example of this. If I take a male aged 55 at standard non-tobacco, I put $200,000 single premium into the contract. First and foremost, I've created a MEC. So we're not going to have the tax-free loan capability, but we still do have tax-free death benefit. But in the first year alone, that $200,000 turns into $211,168 of cash surrender value. That's a 5.58% internal rate of return. And I'm also starting out with a $508,708 year one death benefit, which is well over 154% internal rate of return. But let's flash forward into 10 years. By then, I've got $331,671 of cash surrender value, still at 5.19% internal rate of return. And I've got nearly $618,000 of tax-free death benefit, which again is 11.94% internal rate of return. So huge benefits for our clients, better interest rates than they can find in those other safe money places, and we're offering them life insurance, tax-free lump sums of death benefit. So again, if you have any questions about the products and concepts I've talked about today, if you want to get your hands on some of the videos or sales tools that we provide with these concepts, just write me. It's info@thebiz.tv, or you can go right to our website, www.thebiz.tv. Thanks for joining us, and we'll see you next month.